Hi traders, once again this is Carl Vincent Catalan of Guerrilla Forex Trading. Welcome to the second part of our tutorial on multiple time frame analysis. First off, let's begin with the objectives of the strategy or the order of battle. Okay, the first order of battle for guerrilla swing trading or multiple time frame analysis is to capture trend reversals and ride new trends until exhaustion. We're aiming here with about 100 to 500 pips profit or even more, depending on the strength of the trend. And we enter trades with low risk and high probability conditions in mind. The basic principles wherein our strategy is based from is the buying low and selling high. But we don't just buy any lows and sell any highs in the market. We want to buy low from rising prices, meaning to say in an uptrend, we want to buy the retracement. And then we sell high from falling prices, or in a downtrend, we want to sell the rally so that we can ride the price as it goes down in the direction of the bearish trend. Also, we adhere to the principle, which is the cornerstone of our strategy, which is the multiple time frame analysis, wherein we seek to increase the probability of success in our trading by entering trades in harmony with the prevailing trend direction across different time frames. Now let's try to illustrate these principles in the chart. So I have here the chart of the pound dollar. I've laid out the different indicators that are used in multiple time frame analysis. All right, so first let's try to take a tour of our indicators across different time frames. Let's start with the daily. Okay, daily chart. The two moving averages. This is the weekly moving average, and this is the daily. The blue one is the 21 period moving average. Okay, the weekly is the 10 period moving average. Also on the stochastic indicator, you have here the weekly stochastic and the daily stochastic. All right, now let's go to the 4-hour chart. In the 4-hour chart, now we see here the three moving averages: the weekly, the daily, and the 4-hour. At the same time, we also see here the three stochastics: the weekly, the daily, and the 4-hour. And then we zoom in now the 1-hour chart, wherein we see all these time frames. So we have here the weekly, the daily, the 4-hour, and the 1-hour. At the same time, we also see here the stochastics of the four time frames: the weekly, the daily, the 4-hour, and the 1-hour. The first task for multiple time frame analysis is deciding on your trade bias. How do we trade the currency pair given the current location of the price in relation to the moving averages? Okay, our moving averages help us to give us a credible bias in the direction of the trend. So this is very easy. Okay, our strategy will enable us to only pick short trades below the weekly moving average, and all the medium term, short term moving averages are also below the weekly moving average. Now on the other hand, price is also above the weekly moving average. Our bias is to go long, and this should be confirmed by the other moving averages: the daily, the 4-hour, and the hourly, trading above the weekly moving average. So in this case, our bias is to buy the retracement of an uptrend. So you can see here, when price is below the weekly moving average, the momentum to the downside is very strong. This is giving us about 1,121 pips. Okay, this is the move that we want to capture. All right, using the multiple time frame analysis. Okay, inversely, when price was above the weekly moving average, the strength to the upside of the bullish trend was so strong. This particular move, this whole stretch, actually has given us about 1,474 pips as of now, and this trend is not yet over. This is clearly still an uptrend, because price is still above the weekly moving average. So that's about it, all right? Our moving averages, especially the weekly, the daily, the 4-hour, and the 1-hour moving averages, will tell us the momentum of the price. Okay, again, we will also use this analysis using our other basic indicators or other techniques such as the support and resistance levels. So for instance here, during this downtrend, price found support in this level, and this support was tested. Support was tested during this period, and after this test, this last low, price closed above the weekly moving average. It was established that this price is already supported by the buyers. Price started to form a higher high, higher low. This is now the higher low. After this ABC pattern, the low, higher low, price closed above the weekly moving average, and the new trend started developing to the upside. Okay, the same manner, price found resistance in this area here. Okay, so this is the last known resistance, and so if you place a horizontal line here, this level was tested during this period here. When this was tested and it was established, this level has been supported by institutional sellers. Price corrected back and closed below the weekly moving average. After this, you will note that the massive trend or bearish trend to the downside followed, giving us about 1,200 pips. So deciding on the buy is very easy. All right, very simple. Just look at the weekly moving average. If price is below it, we will trade short, and if price is above it, we will trade long. Now we will go and try to refine our entry using our stochastic indicators. That's the purpose of our stochastic indicators, to enable us to trade in the direction of the trend by entering a setup which have a very low risk but high probability of success. Very basic rule with stochastic is that it oscillates from 0 to 100, and any reading above 80, all right, this is the 80 line here. Okay, if the stochastic is above 80, it tells us that the price is overbought. The uptrend is almost exhausted, and it warns us of a possible reversal to the other side. At the same time, any reading below 20, it means that the price is oversold, meaning the selling is almost over, and it warns us of a possible reversal back to the upside. But I want you to remember that in a strong uptrend, the stochastic can stay above overbought levels for a long time until the trend is exhausted. So for instance, if we go to the daily, if you look at the daily, during this strong uptrend, you can observe that the weekly stochastic has maintained at above 80 reading, all right? And in a very strong downtrend here, to here, you can see that the weekly stochastic together with the daily stochastic stayed below 20 for a long period of time. It is only when the daily started going up above 50 that the momentum of the downtrend was exhausted. Okay, so this is very tricky. A lot of us tried to enter very early into the market when stochastic is already below 20. All right, but we have to remember that during a trending market, especially in a strong downtrend, the stochastics can continue in oversold levels for a long period of time until the end of the trend. So we have to wait for a clear sign of reversal, meaning to say the stochastic going above 50 and heading into 80 for us to decide that a reversal has taken place before we consider shifting our bias. Of course, we shall be guided with our moving averages. The thing to remember with multiple stochastics is that the short-term time frame drives the higher time frame. So for instance, the 1 hour stochastic drives the 4 hour stochastic, and then the 4 hour stochastic in turn drives the daily stochastic. Finding entry with stochastic indicators is a top-down approach which should begin with the long-term time frame. So, for instance, let's begin our analysis with the daily chart. Okay, so here was the previous downtrend. Section of the chart here was the downtrend, and you can see here that this daily, all right, this is the daily stochastic. The thick one is the weekly stochastic. They were both going down from 80 down to 20. During this period, both stochastics remained below 20 for a long period when price was still going down. So this is very risky to enter long while the both weekly and the daily stochastics are still below 20. Okay, but during this period, you see here that the daily stochastic started to over from 20 and head over to 80. Okay, so this is now the first sign of reversal. During this push upwards, the price tried to close above the weekly moving average. So it held there for a while. There was a higher low here on the daily stochastic. So there was a brief opportunity here to trade long above the weekly moving average. All right, this is the last low. So this is now our major support. Okay, at the end of this downtrend, and this is the first push up as indicated by this rally of the stochastic from oversold to above 80 level, or to overbought level. And there was a higher low here in the stochastic. The daily stochastic, there was a higher low here. All right. When this higher low was formed, you will note that the price was supported here by the weekly moving average, which is acting as our dynamic support and resistance. In this case, price found support at the weekly moving average. This was our first entry to the upside in the direction of the weekly moving average. Okay, following our trading bias. So this is our first trade long. This move was about, from here to here, this move was about 330 pips. During this oscillation of the daily stochastic from oversold to overbought level, it was also pulling up the weekly stochastic from below 20 above 20 near the 50 center line. Okay, so here after this first push, all right, after this first wave here, there was a correction back below the weekly moving average. So you will note here that during this cycle of the daily stochastic, when it reached below 20, it was forming a higher low. This is now a higher low. At the same time, our weekly moving average was also forming a higher low. All right, so this gives us an indication, no, that this downtrend here is completely over, and price was trying to make a higher low here, or an ABC pattern. So we want to be trading in the direction of our bias. So we have to wait for price to close above the weekly moving average. So our opportunity, the next opportunity to enter this this market, all right, was here. During this period, when price closed above the weekly moving average, you will see now that the daily stochastic is again going back from crossing over from below 20 to above 20 and heading towards the 80 level. All right, so here there was an opportunity to enter the market to the upside. All right, and During this period, you see here that the daily stochastic is driving the weekly stochastic to the upside. Here, the support was tested, and it found support here at the oversold level. So all we have to do is to wait for it to cross above 20 and look for entry with price close above the weekly moving average. Here, you see that the daily stochastic was making a higher low. This is the higher lows of the stochastic, and price was also making a higher low and higher high. So our next high probability entry was around here. Price was clearly above the weekly moving average. We have to wait for a little retracement. This is the opportunity to enter the. Okay, so you see here during this retracement, the weekly moving average is already above 80. Okay, so what does it mean? Meaning to say that the momentum to the upside is very strong. So we enter here and take this trade all the way to the upside. This is about 1,355 pips. So that's how you look at stochastic on the daily, on the long-term time frame. But you know, there is an opportunity to further refine our entry by looking at the smaller time frame. So let's try to look at this on the 4-hour chart. Okay. Now, after defining our long-term direction from the daily chart, we can now zoom into the 4-hour chart to start refining our entry to a level where there is low risk and high probability of success in our trade entries. So let's try to recap what we have seen on the daily through the 4-hour time frame. Previously, there was a massive downtrend here when price was below the weekly moving average, and both the daily and the 4-hour moving averages are below this weekly moving average. So those moving averages serves as confirmation of the validity of our trend. So when this trend was exhausted, it found support in this level. So we're going to mark this lowest low from this previous downtrend, and then we will look for a clear sign of reversal when price would close above this weekly moving average, and we will now start looking for our entry by zooming in this medium term time frame. You see here from this lowest low in this bearish trend, the daily moving average started to recover from extreme oversold level. Here you see here from this downtrend, both the daily and the weekly stochastic indicators were below the 20 level or have remained extremely oversold for quite some time. It was only when price found support at the daily stochastic started to recover above 20 and started trending in the direction to the bullish zone. All right, so when price reached, when the stochastic indicator reached 80, you've seen here that price started to break above the weekly moving average. So this is the first sign of reversal that we are looking for, but we won't be trading this one yet. As this the stochastic, the daily stochastic progressed above 80 and stayed above there, meaning to say stayed above the overbought level, indication that the trend is still very strong and there is a possibility of continuation to the upside. What we do here is we're going to wait now for the reversal of the 4-hour stochastic. This is the 4-hour stochastic. Okay, when from this overbought level, okay, we will wait for the 4-hour stochastic to retrace back to the 20 level. Okay, so this is the first touch of the 20 level. Again, we don't automatically enter or catch the bottom, all right, because this is very risky. We'll wait for the tests. Okay, this is the first low. See if this area will hold. So this is the second test. So here our 4-hour stochastic was forming a double bottom. So here we already have an indication that this area is supported just above the weekly moving average. So we now have I want to try to form an idea that there are more buyers than sellers in this level. Okay, so during this double bottom, we now have an opportunity to enter our buy trade. Okay, so on this test of the support as indicated by a double bottom in our 4-hour stochastic oscillator, we can enter a buy position here. So this is our first buy trade. Okay, this is about 145 pips. Okay, so here the 4-hour stochastic recoiled just below the 80 level. So we will wash out here and maybe take partial profits here. And price retested back to the support zone. So here the price found support still above the weekly moving average, respecting this previous price action here at the support area. At the same time, you see here that our 4-hour stochastic was forming a triple bottom. So this is the first, second, and third bottom. And we now have an idea here. Continue to go up, to go back up, all right, as we see this triple bottom. And we can make an entry here, all right, with a stop loss just below the weekly moving average, about 15-20 pips below the weekly moving average, all right, and hold our trade until it develops to the upside, all right. This trade gave us about 400 pips. You see here, there was another test of the support line here, but our 4-hour stochastic has given us a higher low setup just above the 20 level. Okay, after this crossed over from the triple bottom here. All right, so this is a very good entry, all right, on the retracement of the 4-hour stochastic when our daily, which is still above 50, back to the 80 line. So this is a confirmation of signals from both the long-term and our medium-term time frames. I always patiently wait for this opportunity where in a low risk but high probability trade setup is presented by our indicators. All right, so we enter this trade here, all right, on the retracement of the 4-hour oscillator stochastic, 185 pips. So as you can see here, this topping process, okay, the daily stochastic is hinting us of a possible correction. So the daily stochastic has crossed over here and is coming down below 80. Okay, so we will not do counter trade here. We will see if our weekly moving average would support the price. Okay, so here both our daily and our 4-hour stochastics are approaching the bearish zone here. All right, so we will see now that the price has closed below the weekly moving average. So we don't automatically enter a trade upon the close below the weekly moving average. We will trade, or we will sell the rally after determining or after confirming that price was supported below the weekly moving average. So here during this test, you can see that price found resistance in this level here. Okay, at the same time, during this test of this resistance below the weekly, just almost at the weekly moving average, 4 hour stochastic has crossed over back, no, is crossing over back to the 20 level just below the 50 center line. All right, so if you would mark the 50 center line here, okay, you see that the 4 hour stochastic has recoiled. All right, and you see here, while 4 hour stochastic has recoiled just below the 50 center line, our daily stochastic has remained below 20 level, meaning to say there is a possibility that this downtrend or this correction will continue back to the major support level. So there is an opportunity here to enter short upon this test of the weekly moving average, which is acting as a resistance in this case. All right, so we enter short here and took this trade down with about 290 pips profit. Okay, so not bad in this case. All right, so actually there are two opportunity to enter short here. Also, you see here, there was another test back to the weekly moving average, and you see here our 4 hour stochastic was forming a double top, all right, just below the 50 center line, and at the same time our daily stochastic has remained below the 20 level. So during an extended downtrend, we have to remember that the long-term stochastics could remain below oversold or overbought levels in the progression of the trend. So here, of our 4 hour stochastic form a double top just below the 50 center line, while our daily stochastic was below 20, and while our weekly stochastic was crossing over to the downside, back to the downside. So we can we can add on our position here. All right, if we haven't sold here, so we can add on our position here. All right, and carry this trade downside with about 285 pips profit. Okay, so here price was back at the near the support area, so we will watch price action. So price was forming a double bottom here, indicating that this level might be the new support. Okay, so when price was making this was forming this double bottom here, you would see that our daily stochastic was trying to cross over above 20. Okay, at the same time our 4 hour stochastic, okay, has just retraced from its first from its first reversal to the upside. This was the first hint of a bottom, and we need the confirmation. All right, so price consolidated here, tested this level. So during this test, our stochastic has came down back to the 20 level, and during this period you would see now shortly afterwards that our daily stochastic is already going back up to the 80 level. So we will wait for price to close above the weekly, to close above the weekly moving average and look for entry. You would see now here that our 4 hours stochastic is above the 50 center line. All right, at the same time our daily stochastic is progressively going up to 80 level, and this is also confirmed by a crossover of our weekly stochastic to the upside. So this is an alignment again of our oscillators from different time frames. During this case here, 4 hours stochastic has remained in the bullish area. Okay, we can now zoom in to the 1 hour chart to look for a more specific signal to enter this crossover of the weekly moving average. This was the point wherein price closed above the weekly moving average, and you see here our 4 hour stochastic has remained just was hovering above near the 80 level. So we didn't get a clear buy signal from the 4 hour moving average, but when we zoom in further to the 1 hour chart, our entry actually came when the 1 hour stochastic uh, indicator retraced back to the 20 level here, all right, while our 4 hour oscillator was hovering near the bullish area. Okay, so this is the first test near the weekly moving average here, and you see here our 1 hour oscillator or stochastic has retraced back to the 20 level, and it was forming a double bottom here. So on this double bottom we can enter a buy, so we enter buy here, okay, on this retracement all the way up to about 100 pips. Still not so bad, okay, for this setup on the 1 hour chart. If you don't see a clear signal on the 4 hour chart, zoom in further to the 1 hour chart to be guided on the signal that is given to you by the 1 hour stochastic indicator. So again, this is another alignment of our indicators in a common direction. You see here the daily was going up, the 4 hours was clearly up and staying in the overbought level. Our weekly is still above 80, an indication that this uptrend here has still some powers or some momentum in it. So there is a possibility of another continuation, or at least a test of this initial resistance that was formed here. Okay, so we were able to ride this trend. Again, here, price found resistance here and corrected back to the support area. Here, price closed below the weekly moving average. Okay, again, we don't necessarily enter short automatically. We will wait for a clear entry from our multiple time frame indicators. All right, so let's look for that. Price here closed below the weekly moving average here. Okay, and you see here price closed below the weekly moving average. Our 4 hour stochastic remained below the 20 level, so it has remained oversold. So we didn't get a clear signal here to enter short. All right, but let's try to consult, right, the 1 hour chart and see if we can get an entry signal here on the 1 hour stochastic. So that's how we do multiple time frame analysis. We always zoom in and out of different time compressions in order for us to confirm a signal that we see in one time frame. This was the moment when price closed below the weekly moving average, and when this was progressing, you see here our 4 hour chart was clearly going down, and here in this area our daily was clearly going down. Our 4 hours was pointing down and has approached this oversold level. But you see there was an opportunity here provided in our 1 hour stochastic indicator, which is actually crossed over back to 20 just below the 50 center line. So this is our 50 center line, and then there was a moment of recovery in an 1 hour oscillator, and it recoiled back to bearish zone, no, just below the 50 center line. All right, so this is this is actually an opportunity to take a short entry here. Okay, but the reward wasn't that much. It was about 130 pips. Okay, still not bad, I guess, for the trade. It's better than scalping with just with just 20 or 30 pips profit target. If we zoom in further to the 15-minute chart, you could actually get a better sense of the entry, a better view of the entry. Because if you look at the 15-minute chart, you would notice that the stochastic indicator has actually made a full cycle back to the 80 level, and it could have given you confidence of your entry below the weekly moving average. So let's look for it. You see here, in the 1 hour chart, the 1 hour stochastic has crossed over just below the 50 center line. But here you see, you can find the 15-minute, the 15-minute time frame oscillator or stochastic indicator has given you a full cycle. All right, so it went up to 80 and has crossed over. You can actually enter when the 15-minute stochastic formed this lower low here. So there was a lower low there, okay, and then the opportunity to enter was came around here on this lower low formation. Okay, that's how you further refine your entry, zooming in further into the lower time frame if the higher, the next higher time frame didn't give you a better appreciation of the momentum. Okay, so occasionally, I would zoom further to the 15-minute chart if the 1 hour stochastic does not give me a clear signal. All right, so this is another option, all right, in our multiple time frame analysis. Okay, so going back to our trade. So again, let's go back to the 4-hour chart to pick up the major swings of the market. Trade here to the downside, okay, and price found support in this level here, and we look for another signal here to trade the possible continuation of the bullish rally above the weekly moving average. All right, here, so price here closed above the weekly moving average. Okay, so we will wait for the next opportunity to enter long. So as you can see here, the daily was going up. All this time, the weekly was just hovering above 80. Okay, so this gives us the confidence that we are trading in the overall direction of the long-term trend. And so here the daily has crossed, stochastic has crossed over and is heading back to the 80 level. So as this happens, all we need to do is sit patiently and wait for the opportunity that is provided to us by the 4-hour stochastic. So again, this is trading the retracement in a rally. All right, so this is our opportunity now to enter the trade in the direction of the uptrend. So price close above the weekly here. So we will patiently wait for the 4 hours to go back to the 20 level and make our entry. So here, just looking at the 4-hour chart, we're already able to establish our entry. So we don't need to go to the 1 hour and the 15-minute to further refine our entry, because here it's very clear that the 4-hour chart has crossed over back to the bullish zone above the 20 level. It didn't become oversold below 20. Okay, so here we entered our trade on the basis of this analysis, and this gave us about 353 pips. You know, but you can still, further refine this analysis by going to the 1 hour and the 15-minute charts. All right, but even here, looking at this formation here, we were already able to gain confidence entering this trade upon the retracement here at the weekly moving average, right? And again, as trend progresses, all right, all we have to do is trade or buy the retracement in an uptrend. So here, the 4 hour stochastic was correcting back to the 20 level, and we were given the opportunity to enter here when stochastic crossed over above this 20, above the 20 level. So this is the crossover. This price found support here, as you can see here, found support in this level. So stochastic crossed over. So this is the test. It found support here. This is the test. So we will enter on the test of the support. All right. At the same time, confirming the direction of our medium-term stochastics. As you can see here, it is already slowly climbing up. All right. So if we enter this test here, could have made about 165 pips on this continuation. So again, do not enter on the first touch of the support. Wait for the test to validate that this support is uh, uh, indeed supported by majority of the buyers. So we don't try to catch bottoms or tops. So we always wait for the test and see the behavior of our oscillator, during this testing process, and decide whether to make an entry with a very low risk but high probability criteria in mind. So this is a low risk. This is the test. Low risk. You just have to put your stop loss a few pips below this support here. All right, support line, and then take this trade to the upside, giving us about 160 pips. Okay, so again, have to wait and enter a trade when the medium term stochastic retrace back to 20, and confirming our signal with the long term stochastics. As you can see here, the daily stochastic has crossed over below 80, so this gives us a warning that there is a strong correction forming. So this was the correction when this daily stochastic crossed below the 80. Again, we don't counter trend even if we see this signal. All right, we don't counter trend because it could be risky. All right, so all we have to do is wait for a confirmation that price will stay above the weekly moving average. And indeed, in this point here, you see the 4-hour stochastic has become oversold here. So when it is oversold, we don't automatically make an entry, all right, because it is very risky. So we will wait for the recovery. So this is the recovery here above the 20 level, all right. So again, during this recovery, we will see that the daily stochastic is still pointing down. So it could be too premature to make an entry here. And indeed, there was another fakie here to the downside, hunting the stops here of the retail traders, unfortunately. And when this was happening, you see that our 4-hour stochastic was forming a higher high, right? Higher high above this 20 level. So this is already a confirmation of divergence of price action. Price made a lower low here, but our 4-hour stochastic has made a higher high. So we can confidently, make an entry, after this fakey price action. So when upon the close of this, pin bar, all right, or this hammer, we can enter our trade back into the direction of the trend. So this whole rally here gave us about 349 pips. You see the power of multiple time frame analysis using our indicators, combination of indicators, moving average, and multiple time frame stochastic. See, actually here there are two opportunity to enter this trade. All right, this is the first opportunity, all right, on this divergence in the 4-hour stochastic, and then in the next retracement of the 4-hour above here during this consolidation period here, we can add on our position. Sorry, can add on our position. Okay, and take ride this trend all the way to the upside. This is another 272 pips on the positions that we've added in this okay. Okay, so that's just that multiple time frame analysis, zooming in from the long term to the 4-hour, and trading or buying the retracement in an uptrend, and zooming in further to the 1 hour or to the 15 minutes if necessary for you to refine your entry. So I've explained the rules of our strategy in an uptrend. All right, and basically all you have to do is do the opposite when you're trading. You're trading a downtrend. Like for instance, if you look at this move here, all right, this particular move from this top here, this double top here, and shortly after that, price closed below the weekly moving average and started rallying to the downside here. All right, so okay, so what we do here, this is the weekly moving average. It was all pointing, it's pointing down together with the daily moving average. All you have to do is go to the 4-hour chart to get a sense of the medium term direction. All right, the daily is our long term, so the 4-hour is our medium term direction, and we will look for entry during the rally in the 4-hour chart. So this is the point wherein the weekly moving average. This is our first opportunity to enter the market in the direction of the new trend. As you can see here, when price closed below this weekly moving average, our weekly stochastic was clearly going down, all right, confirming this reversal. At the same time, our daily stochastic was also below 50, all right, under the bear zone. Our 4-hour stochastic was also down, pointing down. So here we didn't get a clear opportunity to enter the market looking at the 4-hour stochastic. So let's try to zoom in to the 1-hour chart. If we can see if we see this opportunity to go short. So I've said earlier, all the weekly, the daily, and the 4 hours were all pointing down. So we didn't get much. We didn't get a better signal on the 4-hour chart because it stayed below the 20 level here during this price action. So we zoom into the 1-hour chart to look for the opportunity, and clearly enough, you see this the 1-hour stochastic traveled all the way back up to 80 level, and when price was testing this weekly moving average. So when this was tested, you see here the 1-hour stochastic is crossing over to the downside just at the 80 level, which gives us the opportunity to enter this trade in the new direction to the downside. So if we entered on the signal provided by the 1-hour chart here, then we could have entered this trade as soon as possible and profited this first push to the downside. This is about 352 pips. Okay. The next opportunity to enter this trade in the direction of the downtrend was when the 4-hour chart was when the 4-hour stochastic made a full cycle back to the 80. So this was the full cycle back to the 80, and you see here both the 1-hour and the 4-hour aligning together at the 80 level. So all you have to do now is you enter the trade when the 4-hour chart, no, when the 4-hour stochastic cross over the 20. So when the 4-hour cross over the 20, all right, our we can take this opportunity to enter this uh, here. Here, so we will enter this one here. So this move down is about 214 pips. So just have to do the reverse when trading short. All right. Again, if price is below the weekly moving average, our strategy is to take short during the rally and filtering our entries using the retracements of the 4-hour and the 1-hour stochastics in the 80 level. All right. So that's how we apply the multiple time frame analysis in our buying and selling setups. So for now, that would be all for the rules of this strategy, and I wish you success in your forex trading journey.